live. And if you are just joining me now and you're watching this at a later time, that's okay. Hit that like, hit that subscribe button. We have so much to go over, baby. We're going to be starting this thing up in about 4 minutos. So with that being said, welcome. My name is David Worrell. I am a swing trader primarily, and what I love to see is momentum in stocks. I like to try and find the best risk reward in base and trend breakouts. Been doing this for quite some time, and we've had plenty of our followers that are in here now. Joseph, B. Stewie, Dan, Bob, what's going on, guys? We'll let the rest of them pool in. Well, the timer keeps on ticking because we have interest rates. We want to go over those, and we have an FOMC meeting coming up very, very soon that we'll go over. Of course, we have some earning residuals. We still have some earnings out there. We're going to go over that with you, of course. And then I'm going to go over the S&P 500. If you stay tuned, this is going to be pretty cool. We're going to compare because I've seen a lot of visuals floating out there that the last time what the S&P 500 looked like when Trump got into office and what it ended up becoming after so long. And we're going to compare the 2016 Trump inauguration to the current Trump inauguration and where we are at. And we'll do some percentages there for all the nerds. Carl Burr is in the building. What's going on, Carl? Good to see you. Then we're going to go over the Mag 7 today. Now, I usually don't go over the Mag 7, but we need to go over the Mag 7 because when we start to turn around in the overall market, we like to see setups in our leaders. And the overall market, the Mag 7 stocks, take up a big portion of the market. As you can see above me, Apple, Nvidia, Microsoft, Meta, AVGO, Google, BRKB, JP Morgan, Amazon, Tesla, Visa, PG, TMUS. These are our big boats, our leaders in the market. We want to make sure that these are all looking healthy in order to get a good pulse on the market. And then, of course, we're going to look at our beefy Stewie report. We're going to check out his Twitter, his X account. We're going to look over a few of the charts that he has masterfully put together. What's going on, Michelle? It's good to see you. Ayo, torqued up in the building, baby. I'm glad you found us. And then, of course, last but not least, we got a watch list for you. I spent all weekend curating it, and I hope what I put in front of your beautiful eyes, you accept by no surprise. And then, of course, we are going to make sure we hit every single person. If you are in the comment section, first of all, thank you. I appreciate you. But make sure you put what ticker you want to see when we get towards the end of the show, and we will make sure we go over each and every one of those tickers. I am so pumped to have each and every one of you here. I am pumped to get this thing started because we have a lot to go over. Because first and foremost, rally day. We hit the rally day, and this finally looks like a stinking rally day. The last few rally days, because they were rally days and they did hold the last few days, but they look like garbage. It's 9 o'clock. Let's get it, baby. Let's get it. It's been a long time coming, but the curated, pure, beautiful leaders watch list is in. I hope you guys stay till the end of it. Of course, we want to get through a little bit of everything. What's going on, B. Stewie? It's good to have you in here. Thank you so much for helping me out and moderating. Jimmy Bright, of course, we knew he was going to be here. Carl Burr in the building. Michelle, or shall we call you, torqued up in the building. Carl Burr, Dan, Bob, Joseph, thank you guys so much for being here with me. I'm pumped. I'm really pumped. I always like having something to root for, and you guys know, as we pulled back on the S&P 500, it's hard to watch. You know, when you break the 21-day moving average, you kind of, you know, and in my sense, because I have a job, when I go to work, I don't have to focus so much on the market, except for at the end of the day when I come home, because, you know, so I can relax for a minute and kind of go, okay, well, I'm risk off. I'm waiting to see what's going to happen. And, you know, we had this is a potential rally day here, but it just didn't look good. And then we broke lows and we popped back up here, So it's just kind of one of those things like, well, Friday was more of a rally day. Friday was more of a hope, right? We give ourselves a little bit of hope when we have those rally days. If we have some area that is holding and we start to rally higher, that's our rally day. Now we want to see that follow through day. What's up, JP? It's good to see you in the building. Guys, I am pumped, but we need to check our good friend, Papa Powell. Let's see what he has got for us.
Interest rates with Jerome Powell.
Oh, yeah.
All right, so interest rates, that is a big question, and we do have an FOMC meeting coming up very, very soon. If I just look at it, it's going to be on Wednesday, March 19th. You need to pay attention. Why is the Fed so important? Because if they decide to cut interest rates and it's outside the probability of the CME Fed tool, you're going to see a crazy volatile market. So let's say Papa Powell decides to cut interest rates when we have a likelihood of a 1% probability in March, okay? We are most likely, 99% chance, we are going to have a rate stay, that we are not going to cut rates. But if something like that is to be said, or something changes in his voice, and we start to see a more hawkish Fed where things are looking worse and we want to relieve more of those interest rates, you're going to see this change quickly. So whether it's before or after, you need to pay attention because this March 19th is going to be very, very volatile. So you can see in March, we are looking for a rate stay. So we shouldn't be. We shouldn't be volatile. But if the news comes out and there is a change in this rate, you're going to see a huge change in the market, okay? I think right now bad news is good news. Now, I could be completely proven wrong with bad news being bad news, but if we have bad news and turmoil in the market where it looks like the two mandates, one of the two mandates is really broken, inflation is running rampant, and jobs are being lost, you're going to see Papa Powell change his mind really quickly and want to lower the interest rates and start cutting. Right now, May, we are still looking at a stay, and June is when we start to see a big pickup in a quarter of a cut, a quarter of a rate percentage cut. That's in June now. Now, if we zoom forward to December, you'll see here, we're almost looking now at that 3. Our probability of 3 cuts is looking a lot more probable, okay? So just keep that in mind. We're still looking at 3 cuts. It is looking like since, we started re-looking back into these cuts after a long stay, we see that it's starting to creep closer into June and with some probability now in May, okay? So that is what we are looking for. Now, the most important thing is that FOMC meeting on the 19th, but do keep in mind core retail sales is on Monday. Then Wednesday, big old Papa Powell's coming on out. He's got the Fed interest rate decision, but like we said, it should be a stay rate of 4.5. And then, of course, they have the press comment and the FOMC statement. The initial jobless claims are what is coming out the next day at 8:30. So Thursday at 8:30, it's going to be volatile. The initial jobless claims has been very volatile. This is where I say bad news is good news, where if we have a horrible initial jobless claims where more people are filing for unemployment, and this number is much higher, which is technically bad, right? You don't want your country to be constantly filing for unemployment. You want everybody working. You want there to be a high rate of jobs, right? Well, if this is higher, well, that would mean that we need to give the businesses more leeway to trying to borrow that money so that way they can afford things like workers, right? So that's just one thought, and those are my thoughts, not yours. Of course, we have the earnings whisperer. Now, these are what I'm considering the residuals because the big dogs have already kind of completed their earnings, but we do have some big ones that I've seen like FedEx, Nike, Micron. Those are some big ones, some popular ones. I know Nike hasn't been doing so well down there. I know there's a lot of people watching NEO and Carnival. I took a look at Carnival. that thing really cratered back down just when I thought, the cruise line ships actually had, a nice probability of heading higher. But nothing really, when I see all this, you got your General Mills, you got your big boats, but nothing really here pops out. No Mag 7 stocks are in any of this. So this is why I call it the residuals. This is kind of like it's slowing down, right? The earnings season is coming to a close. So, you know, you take a look at this, it's with a grain of salt. You could still get some turbulence in here, obviously, if you're in any of these stocks, which if you're trading like I am, you're not watching a lot of these stocks. There's not a lot of momentum in these. But something could turn around in these. If we get a big push on volume over 20%, you might get yourself an EP out of one of these. But it's definitely something to keep an eye on, what's going on in here. And if you're in one of these, be very careful. So that's what I got for that. What do we got next? Let me see here. The ETF and SPY review. So that is your interest rates. That is your earnings whisperer and your earnings calendar. And if you are just joining me now,
hang on, we don't want to hear that.
You don't want to hear that? What's up, Erica K? Zamora in the building. Carl Bear says, pew, pew. That's right, baby. Squad in the house. Did you poot, Carl? I love it. Is Norm here? Yes, Norm Conklin. He made it. Every time, Norm. Every time you show up at the end of the damn show. I'm glad you're here. I'm pumped that you're here right now. We got 16 of you watching. 13 of you have voted on the poll. Interest rates. I say, what is the best part of this show? Because I truly want to know, because I'd like to capitalize on what is the best part of the show. Interest rates. We just did interest rates. 15% of you are now pleased. 23% say the watch list. Well, that's why I put it at the end, because you have to make sure you get to the watch list. And then, of course, we have the sector and ETF review, which we are going to go over right now, which I find is the most important part. It helps leak and lead you into the right direction of whether it is a good time to get into the market and what sectors are hot. Then, of course, the beefy stew charting. 54% of you say the beefy stew charting. I agree with you. I actually voted on that with my other account. But if you haven't already, take a look at my screen. Do me that favor. Do it quick. Do it now. If you scroll down, there's this cute little button. It's a thumb. Smash it. Subscribe. Like. Share it with your mama. And then, of course, B. Stewie, put the link tree on here. You click it, stick it, see you later, bye. We got everything on here. Our YouTube, Discord, Trading View. Click on that. Get yourself a little discount. Our Facebook and our Twitters. So I appreciate each and every one of you for doing that. Let's go ahead and take a look at our ETF and SPY review.
This is your ETF and S&P 500 review.
All right, guys. So the S&P 500 below a 200-day moving average. If we were to just look at this, I would say, hey, we are hands off. Things are not looking good. And that is very, very true. There is obviously one trade, which shout out to Carl Burr for calling me out on it. I told everybody in the Discord that I did take a trade, as I have not been trading for about 2.5, almost 3 weeks now, after my last play was kiboshed at break even. He said, well, why are you trading? Have we gotten a follow-through day? And I said, no, actually, we haven't. So for the majority of this time, I have been risk off. I did take a little dabble, but we'll talk about that later. Right now, your S&P 500 is at a rally day. What do we want to see after a rally day? We want to see a follow-through day, which happens usually 4 to 8 days after a rally day. We were talking here when we had this first rally day. We rallied up off this, and it just did not look good, especially when it ends the day red. It still is a rally day, but the next day it fell lower. Not much lower, but it did fall lower. And Friday we rallied, and rally we did. And if we look at the overall S&P 500 for the day, this is what looks like a rally day. We're starting to see a little bit of that push that we want to see across the board, not just a few stocks holding us up. We want to see the push across the board, and that is exactly what we got, is a push across the board. Let me see if I can't find, there it is. So when you get those pushes across the board, it gives you hope. It gives you that sensational desire to make sure you do your due diligence. You dive deeper into the stocks that are leading. But unfortunately, when we go through these sectors, you are going to see there's not so much to be too excited for at this time. Now, before I lose you, we need to stay focused here, because this is where things could start to turn around. Now, if we break this low and we continue lower, you're not going to hear me be so positive. I said something positive in our Discord today, and somebody said, you know, that's Dave coming out of the woodwork with some positivity, but I always aim to be positive, because if you guys know, and I bring this up constantly in our resources here, you'll see I have this here. I posted this here, and I live by this. Look at this beautiful chart right here, folks. This is the bull and bear market since 1946. The average bull market has lasted 5.6 years and has gained about 192%. Look at the bullish outlook and the bearish outlook. I much rather be with the bulls. That's why it always pays to be positive, folks. I always use this because it's so important to be on the right side. And right now, there's a lot of bears, and there's going to continue to be bears. There will always be bears, whether you're in a bear market or a bull market. There's going to continue to be bears. So the S&P 500 now has a rally day, and I am being positive with this rally day. I want to see it continue higher. I'm going to root for the 401ks, the Roth IRAs, and any type of investment vehicle that is out there. Let's go S&P. Now, if we run through the index, that is just root, that is hope, that is not what we want. We want to see a follow-through day. IWM well below a 200-day moving average, as well as the NASDAQ much below a 200-day moving average. QQQ as well. The Dow Jones Industrial taking an even larger hit, much below, well, actually, probably a little, doing a little better than most of the other indexes. The Dow Jones Industrial still below that 200-day moving average. Bitcoin actually trying to stay above that 200-day moving average. I'm starting to see Bitcoin as more of one of the master classes, the bigger boats. At least the way it's been moving lately, it's kind of been moving in conjunction with the rest of the big guys. You know, it's pulling back when the rest of the overall market pulls back, as well as it moved up here. XLK, technology, below a 200. Consumer discretionary, now below a 200. Hack, which is the cybersecurity, still above a 200, but still declining on a short time. What's up, that one guy? We'll get to Tesla a little later. And yeah, Ali reporting this week. Yeah, Ali, we'll take a look at that chart just a little later. XLC, this is communication services, not looking good. And we're going to go through these kind of fast. This is tech software, below a 200-day moving average. XLP, below. This is KRE. This is regional banking ETF, below a 200. XLF, also still above 200, looking better than some of the other areas, but still below all of its moving averages. Biotech, looking good in the charts, but if we look at the ETF, it looks like absolute dog crap, continuing its new lower highs. XLRE, which is your real estate, again, still not looking good. XLB materials, still not looking good. XLV, which is your healthcare, below its 50-day moving average, but just under. So looking better in the healthcare than most of the other stocks currently. This is the breadth of the market, folks. We want to make sure we get a good bounce off this area. This is a good sign that we're bouncing off the previous area of resistance. It's now showing us support. Yeah, be Stewie with the puke emoji on the spider. I know, man. It's bad. It's bad. But I tell you, that's why we have to stay positive, though, because if everybody thinks this is going to head lower, just as we use some social sentiment the last time, Joseph likes to use a lot of that social sentiment, and we seen, first and foremost, if people get too bearish, which things are looking very bearish, that might be the perfect time to be a part of that. Industrials below. MDY, the mid-cap 400, well below a 200. XLE, even though everybody is talking about energy, it's still below a 200-day moving average. Keep that in mind. XLU, now utilities is doing well, and utilities will continue to do well in this risk-off environment. People are going to this more as a flight of safety. XOP, this is gas exploration and product, much, much lower, doing the worst. This is nuclear. This is what I wanted to see off of these highs for it to get a tightening range before breaking these all-time highs. It did not. That's why we didn't take it, and that's why we sat back and watched it. And you could see that in a lot of the nuclear stocks that we were watching, SMR, NNE, stocks like that. So we're waiting for those to shape up. Long term, we have new higher lows here. Maybe this could be a bottom. I don't know, but it's below a declining 200-day moving average. It's kind of where I stay away. Now, gold, now we're finally starting to see some delicious new higher lows, and this is what we see here. Gold. We talked about gold last week. We talked about it being a hot sector. Hell, we've been talking about gold since we broke this yearly breakthrough at that $2,000 area, that USD to gold. This thing broke higher, and we've been watching it ever since. Now, I was talking after we broke out to here. I started to talk. I was very bearish on gold because a lot of the people around me started talking about gold. That's usually a sign. But no, this thing keeps breaking higher. We're on our third leg now. 1, 2, third leg of our gold push from its yearly basing breakout. So I don't know, how high can it go? We'll see. Right now, it's definitely a flight to safety, and we're going to keep an eye on it. This is KIE. This is the insurance ETF. You guys remember I scribbled all over this last week. We're going to leave this scribble on here. I just think it's fun because, you know, I scribbled where it was, and this is where we were. This is where we were at last week. And you can see, you know, I'm just drawing out what best case scenario for me would be these new higher lows. So right now, the insurance ETF, KIE, is above all moving averages. So that's a really good sign to see here, especially when you're in a stock like Root. DFEN, now this is the aerospace. This is below a 200-day moving average, so not looking so good, okay? So when it comes to what's hot, we're talking gold. Follow-up sector would be silver. Insurance names, you're going to see me talk a lot about a lot of different insurance names. What was the other one? What was the other hot sector? Damn it! I got a little lost there. No big deal. But anyway, that is your ETF and SPY review. Just keep in mind, guys, we are still technically risk off. We want to see a follow-through day. This rally day is just hope, and you cannot trade on hope, okay? You need to be really, really careful in this market. Even if it just chops around for a while, it's very difficult to trade in those markets. You either want a constant uptrend or a downtrend. So we'll see. I'm really curious what you guys think. If you think we're going to continue higher or not, maybe we ask that in the next question here. But yeah, China. China, dude. Yeah, that's it. You're right, Joseph. China is hot. And, you know, I got some China names. We could talk some China names. I do have some of those on the watch list as well. So now this is something we don't usually do, but we're going to go over it. I used to do this all the time. But, guys, I want to go over the Mag 7, okay? We're going to go over the main ones here. Let's check out NVIDIA. Now, the reason why I want to do this because I want to see these kind of shaping up, right? Here's the stock market on Friday. Okay, this is not what the stock market has looked the past 2 weeks. Well, the big thing is if we want all the boats to rise, you know, with the rest of the ocean, this ocean, the biggest waves are coming from Apple, NVIDIA, Microsoft, Google, Meta, AVGO, Berkshire, Amazon, Tesla. We want to see those. We want to make sure those are doing well. So right here, we can see we have NVIDIA. NVIDIA's got a nice bounce, which we definitely want to see in this situation. It's disheartening to see this below a 200-day moving average, and I really hate to say it, this really does look like it's on a downtrend. You know, so even if it does bounce back up to this area, it would take a lot for me to be on NVIDIA's side because we have this low here. We need to create a new higher low at some point in order to have a change in trend. Unless we get this, this change in trend, the next expected move would be resistance to a new lower low. So that's what we're watching out here for, guys. We want to see whether this is going to hit resistance and create a new higher low or a new lower high. If this can create a new higher low, then my expectancy is greater for the S&P 500 to continue higher. Okay. We also have Google, our good old Google here. It's at an area of support. Whether it's going to be supported here or not, I do not know. We are starting to enter what looks to be a stage 3, a possible stage 4. Just like on NVIDIA, to me, this looks like we're starting a possible stage 4 here. We just got to be, we got to keep an eye on things. So Google's almost looking like it's going to enter a stage 3, or it's in a stage 3 entering a stage 4. And Meta, same thing here. This could chop around for a couple more weeks and then start to roll over here. Is this exponential growth of Meta off these lows? Are we going to see this thing rip, tater, chip? Are we still going to see it continue? That's a hard question. Meta has had a really good run. It wouldn't be surprising to see it kind of roll back over here. But at the same hand, if we're being on the positive side, you can see right here, guys. Boom. Area of support. You can see it's been resistance. It's been support. Now it's pulled back down. It's acting as support again. So we'll see if it wants to hold there. That's positive. Apple, huge pullback here, all the way back down here. The real support is all the way back down here at this $200 area. So with Apple being such a big pullback here, I'm not seeing any support. Where's the support? There is no support in Apple. Now, I'm not saying it can't bounce and it can't continue higher, but it's very odd for me to think that this would hold here anywhere in this dead space. There's not a lot. And, just to kind of put more of a visual on it, I know a lot of you guys like using this fixed range or this anchored volume price. So we'll just go ahead and do this to kind of give you guys an idea. You can see the highest area of support is going to be right here at this low. The second biggest area is pretty close to where I drew it. It's showing a little bit lower here, which is reasonable because there's more traded area. But regardless, folks, we're below this this area right here, a very large trading point at that 229. With us being not just below that, we could bounce up, run into that area of resistance of 239 area, and then start to head much lower before we actually get the real bounce. So right now, I'm seeing a lot of things that we could get a relief rally, but we're probably going to find some resistance and either head lower, create new higher lows, or new lower lows. That's what's dangerous. So we need to be very careful. Next up is Amazon. I don't even want to talk about Tesla. Tesla, I could see this thing be oversold, but who's to say it's not going to get more oversold, right? I would love to see a big bounce off this for anybody that's investing, but we're below a 200-day moving average. I want to see leaders, guys. Leaders are what pays me. Leaders are what I like to put my money in. Leaders are what lead, and Tesla's not leading right now. Amazon, same thing, below a 200-day moving average, but looking like it's at some support. And same thing for Microsoft. You can see I just drew it out right here. So there's pros and cons to all these Mag 7 stocks. There's a lot of pros. That some of these are at an area of support. We are getting a bounce. The con is, even if we do bounce here on Microsoft, we have this area of resistance at 431. I think if we bounce, we smack our heads on this shit, and we start to head lower. Of course we need a relief rally. I'm very excited, and I want this market to continue higher, but we cannot be naive to the fact that we have a lot of resistance above us. So let's be happy with this bounce. Let's bounce, but let's see where we're going to hit our heads, and then if we create new higher lows, that's when I'm going to get really excited. But until then, we're going to find the leaders. We're going to make sure that we know where the best leaders are. And some of the leaders, my boy Beefy, the beefiest of stews, that gentleman has been doing some amazing charting. So let's head on over there and let's take a look at the old Beef Stewie charts. And then I'll hit you with my watch list.
Oh, I see you over there. You got problems? We've got the beef.
All right, guys, this is your beef stew for the day. I hope you enjoy. So get your sniffers on, take a big old whiff, because this beef stew is LIT, baby. This is your beef stew charting. If you haven't already, make sure you go give him a follow. I will go ahead and just put that in the chat right here. Go ahead and give him a follow if you haven't already. This is my boy. He's been with me since day one of the start of the YouTube, and we go way back, all the way back when we were busting our ass in the construction zone. And now look at us making these beautiful charts. So this is a few of the things that he's going over. They aren't recommendations. He's just showing you what he is looking at in the charting that is on there. So we're going to go through here. There's a few I wanted to take a look at on this. So ASTS is one I did want to take a look at because we did chart this before, and you can always see he always has an amazing picture with it. ASTS, the 12.3% average daily range. This thing can really get to moving, and you can see here he has threw an anchored VWAP on an area right before the large amount of volume came in, which was earnings. And you can see here as this anchored VWAP holds, we're right at that area of anchored VWAP. And then of course you have your POC, also known as point of control, which is showing your highest area of volume coming through here. And you can see it's very clear that this area of volume is the most traded area. You can see all this price action all through this area. That's what's making it the point of control, because people are interested in this area, in this price. This is price action, people, at its finest. So the point of control is the price action of control. You can see it clearly bounced right off this area. He's creating a trend line showing you that we are starting to tighten up. After expansion, you get contraction. After expansion, you get contraction. We will get expansion once again. What way will ASTS go? What I don't like about this company personally, which he puts right here to show you that this is not the prettiest stock. You can see that they are not making money. They are actually burning money right now. So it doesn't mean it does not meet those can slim or those William O'Neill criterion, but it's still a great chart to learn from. And I really appreciate him putting in this on here. He also zooms out a little bit further to help show you a bigger view of this. You can see him pulling the anchored VWAP now off the previous earnings, which had a huge volume gap up on here. I also see a volume dry up on these pullbacks. So less people are selling on these pullbacks, more people are buying on the push ups. And you can see here, you have what I think he would consider a volume handoff. So you're handing it off to the other earnings, or this would be the volume handoff where you're going to go off of this anchored VWAP. So very nice charting. And I had no idea that ASTS was already back to its previous highs there. So very interesting to see. We've played a lot of ASTS in this area. This is the weekly time frame, so I'm not as familiar with it, but a very nice chart and very nice charting. Oh, yeah, and make sure you like our new link tree. This is the Swing Trader Strategies Trading School. We got a little bit of everything in here. You can find our Facebook and our Twitters and all that good stuff. Good stuff, good stuff. And ARIS, let's take a look at this. So this is the ARIS Water Solutions. I believe this is probably one of your California plays, you know, with all the fires and all that good stuff. ARIS, you can see 6.95% average daily range, with the point of control being right here at the base. You can see the anchored VWAP off the previous earnings, and it's above that as we have a tightening range here. A basing breakout, it looks like it's tuning up, and we have a little bit of earnings here. We'll see what this thing wants to do. And here's the zoom out, the weekly time frame. You can see we have a base on top of a base, so that's nice to see. I actually want to pull that up on my charting right now. ARIS, let's take a little peek. Oh yeah, so that's looking really nice. A more recent IPO, Water Solutions. You can see we actually do have some EPS and sales growth. And this is in the utilities. So right now it's in the hotter sector. Obviously, you don't really want to be getting too into utilities. They usually don't move that fast, but ARIS being in the utility sector, you can see it's above all of its moving averages and starting to form a nice tightening range. So very nice find there. The beefiest of stews, ladies and gentlemen. Make sure you go give him a follow. Check out his Twitter, his X. It's definitely one that you want to see. And now, ladies and gentlemen, boys and girls of all ages, I have what you have all been waiting for. It is the one and the only, the leaders list. So, with that being said, we're going to run through these guys. Remember, these are all just ideas. These are my thoughts. They are not yours. Do not buy just because I have shown you this stock, although some have, and they have made millions. I don't want you doing that. These are all just thoughts. These are ideas. This is also just showing you what stands out to me. Right now, I only have one trade, and that's in ROOT. I took this trade because I've been watching the stock for a long time. I called out this yearly basing breakout. It hurt to watch, but I was a good little boy, and I waited until we had a new basing breakout. You can see right here in one day, I'm already up 1.41R. So we're going to wait and see because this is blue skies. The root can go rip, tater chip to the north side, but I think the trade is past. If you didn't get it at the 140 to 142 area, then you are already too late to buy this stock. It's in a hot sector. The issue with this root trade is I don't know if Root, the insurance companies, are a flight to safety or not. If they are a flight to safety, if the overall S&P 500 does start to rally, I doubt I will see Root continue higher. But if Root is not a flight to safety and we actually do see the market rally, turn around, I think we will see Root really get some legs. But currently, Root has been doing well when the market is trending down. So if we are seeing inverse correlation there, I do have to keep a very close eye on Root if this rally day starts to form and digest legs and we start to rip, tater, chip. So keep that in mind. That is my only trade. I am up on the trade, but I only took half share size because this is not my trading environment, okay? I've been 3 weeks without a trade, and now I'm trading. So I do have to recognize that. This is not my trading environment. I am in a hot sector. I am in a leader in the market. It does follow the Cancelim criterion, aside from the one and only market direction, which is a big one. So I am aware of that. I decided to take the risk, and hopefully I get the Rari, okay? AXGN. Now we're going to see a lot of the a lot of stocks out there. AXGN is looking on the better side. I didn't want to delete this right away because it's got a good EPS and sales growth. I didn't look too deep into this, but I like this trend that it seems to be holding here. So I like the trend minus being below a 50-day moving average. This has an RS rating of 98, so it's holding up well while the overall market is pulling back. So if XLV, the health and healthcare technology sector, wants to hold, this thing might be our new leader. So I'm just keeping that on watch. Now we have to keep in mind there is a lot of China that is out there. We do need to be very, very careful. This is one of the very many China stocks. The only reason why I bring up and wanted to tell you guys about this one is because it's the only one that looks different. You can look at Baba, you can look at any other stock. It all looks like this. They all look like high, tight flags. Now, I don't know about you. If you want to play Baba, if you want to play a Chinese stock, you're more than welcome to. I would not play a Chinese stock really unless it was a day trade. If I knew I was going to get in and then get out at the end of the day, because at any given time, their leader, their dictatorship leader can come out and just cut all ties. They can say and do whatever they want. Now, it's part of the risk of trading, but I just wouldn't hold overnight with China. That's why I don't look at a lot of China stocks, but they all look like this. They all look like this high, tight flag, but TUYA looks a bit different. It is still a type of high, tight flag, But, you know, China's looking good. China's looking high and tight. And, you know, I wish the best for anybody that has invested in China. Nice job, Michael Burry. You know, it's slam dunk, my dude. HWM, so I like this. Now, I know the defense, we went through the sector watch list, but I like HWM and I like the way GE is looking. We should put those side by side because those are the leaders in the aerospace defense. You can see these regression lines. It's holding it very, very well. This might be one of the best buys right here for Howmet Aerospace. Look at their EPS growth. Look at the sales growth. This is why it is a leader. It's holding up still very well. Above a 50-day moving average and trying to get above the 10 and 21-day moving average. GE, on the other hand, you can see is holding up very well above a 50 and trying to get above that 21-day moving average as well. This EPS growth is nice, but their sales growth does look like it is declining. So HWM tops the GE, but GE is still a leader in my book. We also have SE, guys, and do keep in mind, once I get through this list, which there's only about 15 stocks, I'm more than willing to take any stock that you don't see on this list here. Let me know what it is, and I will not judge you too much. Now, of course, I'm going to tell you if I think it's a shit stock because it's not something I would trade, and it is a shit stock. It doesn't mean you can't play it. Doesn't mean you can't articulate why you're looking at it, but we're going to go through the full list, and then we'll see what you guys are watching. Yes, Loke Doc made it, baby. Let's do this. Now it's a party. I hope you brought the beer, baby. This is SE. C Limited. It's the internet retail trade. We know this sector is down, but this is above a 50-day moving average. It's still creating new higher lows with an RS rating of 98. I still think SE is a leader. It got transferred from the last list. Not very many got transferred from the last list, just a few. SE did get transferred, so that's very good. We already went over Root, but Root's sister stock is EVER. You can see right here, if you missed Root and you are looking at trying to get into something in the REIT space or the internet or the insurance space, we have this beautiful cup and handle right here. This thing could break out with an RS rating of 93. You see the EPS growth. You see the sales growth. What are you going to do about it, you know? COMP. Now, Dan Bob brought this one up for us, and he loves to mention, as he did on RKLB. Take a look at this, guys. Look at this area right here. We're just going to cut this off so you can see this. Dan Bob was bringing up, look at all the wicks. Every time he gets up to 30, he said there was plenty of wicks. And even one last hoorah, we came up, cleared this whole shelf here in this 30 area and fell back down. And sure enough, what do you know? This thing fell right back down. Not without coming up one last time to test 30 and then failing hard. That was a beautiful, beautiful call out by Dan. And he is also looking at COMP as well, because every time it pops up, we are getting sold off. A pop up into this 950 area, a sell off. We are popping up. The only argument is we are creating new higher lows, so we are getting tight. Who is going to exhaust first on COMP? Will it be the buyers or will it be the sellers? And this is what we look for, because after expansion, we get contraction. We are very, very, very tight. And if my stock speculator senses are tingling, I would say we will get an answer Monday, tomorrow. COMP will decide what direction it wants to take, okay? I usually don't call shit out like this, but you know what? Here it is, right here, right now. You heard it here first. COMP will decide its direction tomorrow on Monday. Call me out. Give me shit if I do not actually, if my prediction's wrong, give me shit about it. I love it because we all know nobody really knows. I jumped into ARKO when it dropped, thinking it was good when it held for, goodness, Loke. We'll go over that in a little bit. But yeah, COMP, put it on your watch list. I still have PLTR on here. The one big reason why I like PLTR is because after all of this huge gap up, this huge run up, we just came back down. We filled this gap and we're just right here before things got a little too exciting. So I think if this thing wants to trade sideways for a little bit to start creating new higher lows, I still think PLTR could be a leader. I was talking about to Dan Bob about this before, about their they're so the people are looking at PLTR so far forward that they're doing stock prices 7 years ahead and stuff. It's hard. It's hard to be excited about PLTR, but price action showing new higher lows. It filled its gap. We're going to see what happens to it. OKTA, technology service and package software. So this one here has awesome growth right now and EPS growth as well. I'm trying to get to this here. Provision of an identity management platform for enterprises. It operates through the United States and international geographic segments. It includes single sign-on, multi-factor authentication, access gateways, API access management authentication. So it's in that security area, and I like it. I like this cup. I like this handle. I think it could definitely continue, because we already see a breakout here. Looking very good. There's a few things that broke out, guys. There's a few things from last week that we talked about. That's the last week we talked about OKTA. We also talked about SSRM. You guys remember this? This is the gold play. We talked about SSRM. I think B. Stewie actually had this one charted out as well. Absolutely beautiful. So this is gold mining, material mining. And there's a lot going on with gold right now. NUTX, I found that I could take from the last chart and move it on up, Loke Doctor said, you asked what shitty thing we did you want to look at. Oh, Loke Doc. Yeah, we'll definitely take a look at that too. ARKO for sure. And then back to the insurance, Bro. We talked about Bro. I kept this from the last one as well. I like Bro. To me, it's looking really, really tight. The only thing about Bro that is a little different than the rest is if we look at Bro, it moves 1.7%. So it's very, very slow. That's why I like Root. That's why I like a few of the other stocks, but because Root moves much, much faster. Root, opposed to Bro moving 1.7%, Root is actually going to move 12.2%. Yeah, 12.2%. So it's going to move, 10 times faster than Bro. So Bro looks like it's creating this high tight flag. Like if we just look at this and then we go over to Bro, you can see Bro is creating that same flag right here, but it hasn't broke out yet. So Root is already on the move. Will Bro follow? I don't know. We'll see. But Bro is definitely one of the leaders, and Bro is setting up too. But that's why I just played with Root, because Root is probably one of the fastest insurance stocks. WGS also was another one that I took from the last watch list. Guys, WGS is kicking ass. It's taking names. It's a beautiful, beautiful stock. PBI, I just have this on my watch list. I don't know why I'm keeping this on here. Most likely because it holds this 50-day moving average and is just filling this. It had a beautiful trend break, and if it sets up again, we might want to take that. Also, this is the Philip Morris International. The volume that it's trading is 5.54 million. It's just a slower mover as well, but I really like how tight this is getting. It's moving like an internet or an insurance stock as well. Is this insurance? Let's see. Which engages in the business of delivering in smoke-free future and evolving a portfolio for the long term to include products outside of tobacco and nicotine sector. Okay, that's interesting because we did have one in the nicotine sector. ACMR, was that? No. That was Yosef. So ACMR is looking really good. You can see we have these new higher lows with an RS rating of 98%. They do have an EPS growth, although the May 25th had a lower than expected growth, but we also still have sales that is declining, so be careful with that. But ACMR research looks like it's trying to create new higher lows and continue higher. But PGR, this is another one. This is the Progressive Corporation. So Progressive, you guys know the insurance company. It's looking a lot like Bros. It's looking a lot like Root. It's just not going to move as fast as those. So again, another reason why I took Root. MP. Okay, so now you don't see this often. MP's a mover. This is materials. EPS growth, garbage. Sales, garbage. But I just wanted to point this out. It's creating, this new break out of the stage 3. Might be entering, or I'm sorry, stage 1. It might be entering at stage 2 soon. I just keep that in mind because you don't see these non-energy materials doing this too often. The 200 is starting to curl up. The RS rating is 98, and it just created this basing breakout. Just something I wanted to point out. We also have CDXC. Now, this is kind of a little bit more of a speculative stock, but guys, when I see something like this, it gets me excited. It really, really does. Yeah, Dan Pop says PM a sin stock. Yeah. Oh, it makes ZYN? Oh, does it? PM does? Oh, I didn't know that. So PM actually makes that Zinth stuff? Okay, cool. Sin stocks. They're sin stocks, Dan calls them. So CDX, I know nothing about this, but it is in the health technology, pharmaceuticals. So a little bit of inner risk, but you can see here it's doing very well. This is the tightening range that I like to see. This is what I like to see. I could see this thing ripping. I do have an alert on this, but I don't know what's going to happen here. It's really, really tight. Really, really tight. You can tell that, both sides are trading this thing. Let's look at the volume really quick. The average volume, 1.21 million. So it's tradable. It's tradable. You're not going to get caught in that. And also we have CDX. Simplify high yield. I don't know why this is on here. This is not what I meant to do. So that is the watch list. That's what I did. I put CDX and then it was supposed to be CDXC. So I got it. That one guy, you're welcome. You're very welcome for the information. Very, very happy to be here tonight, guys. And if you guys have any stocks, any tickers, or anything you want to talk about, let me know in the chat right now. I'll be here for a few more minutes. But guys, this is your leader watch list. And just to give you a little understanding, a little rundown, when we get these pullbacks in the S&P 500 like this, you kind of just got to sit on your hands and you got to see what's going on. Right now there's a lot that's going on with gold and with China and with pharmaceuticals, and I just don't care. I don't care for it. I'm fine with the internet, the insurance. I'm fine with going over that. I'm fine with holding on to a stock like that, but not going full bore, not putting my whole account. I've taken a quarter of my cash and I put it into Root, which some might say is quite a bit, but the way I see it is it's a starter position, and we'll see. We'll see if I can add to it or if I just hold on to what I have and let it carry on. But right now I got a good price at the basing breakout, and I can use this 10-day moving average as my stop loss, as a guide. But right now I'm just using the base of this day. If I didn't get this right, then I'm going to accept with being wrong if this pulls back. If this wants to continue higher, then I will sit back, relax, and wait for about 10 R to take about half of it out, okay? That was good stuff. All right, let's see what we got. And just before we do, so guys, you put what you want to see in the chat. One thing I want to go over. Guys, with this Trump thing coming in, I've seen a lot of people talking about, tariffs this, tariffs that, Trump this, Trump that. Let's just look. I want to show you guys this. Let me blow this up on the daily time frame, okay? In 2016 was the last time Trump was inaugurated. And I want you guys to see right off the get, when Trump was inaugurated in 2016, in January, you can see we had a huge gap down and we went much, much lower. So the start of January, if we take previous day, you can see we went as low as a 11% dip before we started to recover with that S&P 500. So do keep that in mind. And where did we come from? Where did we come from before that? Well, right here, 2014. This is where we started. Oh, I'm sorry here, guys. So this is going to be the 2016. So we just traded sideways. We traded sideways basically here, guys. All of 2014. 14 we came up. 2015 we traded sideways. 2015, we dropped back down to the lows of 2016. And then we started to recover. And you can see we had some dips during this, during his presidency, but overall, we continued higher. Now, regardless of what happened then, that doesn't mean that is what is going to happen now, but I do want you guys to see the last time that he was inaugurated, we did fall. We got a reset in this market, much below a 200-day moving average, and we came much lower. It was a scary time indeed, and then after that, look at this, guys. Once we got back above that 200-day moving average, we stayed back above that 200-day moving average, and we continued much, much higher. And then, of course, we got your beloved COVID, which was handled, depending on depending on how you want to, view that. You can see the money printer gets turned back on, and we just skyrocket. So old Papa Powell had some fun there. And then, of course, the bear market of 2022 happened, and we were here for all of it, guys. We were here for all of it. So if you are just joining me, make sure you hit that like and that subscribe. Now let's see what we have in the chat. Sinstocks got me into investing because I'm a smoker and figured I might as well buy the company at the same rates I smoke them. Hey, that's actually a really good point. And that is, what's the investor? I can't think of his name right now, but they always say Peter Lynch. You put your Peter Lynch cap on. And, if you're a smoker, well, look at the things that you're smoking. If you're an energy drink drinker, what's mostly on the shelves? Who's buying what? Is Celsius doing good? What's Monster into? What are the new brands coming up? If you're into designer clothes, make sure that you are looking at the designer clothes. How's Abercrombie and Fitch doing? How's Lululemon doing? Watch the earnings. So I like that. If you're into the sin stocks, then you understand them a little bit better. You know the world, you know the realm. ALHC and CVS both making earning flags, setting up for a breakout. If you're into that kind of setup. So let's take a little peeky gander here. Let's take a look at ALHC. You can see ALHC is on a nice uptrend. So this is your daily time frame. And you can see this thing is a 5.3% average daily range mover. So that's nice. And this is Alignment Healthcare as well. Not one that I've heard of before, but you can see we are clearly on a nice uptrend, respecting the 50-day moving average the majority of the time, now above all moving averages and showing we're getting some wicking off of this top area. So this could be setting up a basing area right up here at this top, but I do like ALHC, very clear, because for one, in a downtrending market, we have an uptrending stock that's holding above all of its moving averages. So that is a really nice stock to keep an eye on, not to mention the average daily range is that higher than 5%. So I want to put this on the leaders list, and I want to thank you, ALHR. Did I get that right? No. Let me see. ALHC. ALHC for putting that out there for me. Yeah, and I do like that. So after earnings comes out. Earnings proves itself to be a double beat, a 13.8% surprise for its earnings, and its revenue, a 3.61%. So yeah, am I into that? Absolutely. It beat its earnings. It's showing respectful EPS, respectful sales growth. It's also gapped up on earnings, hold that gap up, and now showing a basing area right up here at this top. I just want to say thank you so much for showing this for me. It's now on the leader list, and this is what I like, guys. I want everybody to be a part of this because I cannot see everything. I am not going to see everything. I am only human. Dan Bob is our AI bot, so keep that in mind. So thank you so much for contributing that. You are the best, Michelle. Thank you, thank you, thank you. And CVS, we'll just take a look at CVS. I think CVS is a slower mover though. And I don't really like this break, but it is above the 200-day and it's holding out very well. The RS is only 87, but if CVS can turn around, let's say they get bought out or something, but this is just on a huge downtrend. But we could see very, very soon. Let's see, their earnings was a surprise though. Wasn't surprised, so that's nice. But, I'm sure it's not going to be getting that 25%, but It might be one to really keep an eye on here. I mean, it does look like it's setting up. You got a beautiful basing top right here. I'm gonna put an alert on there, and I'll tell you why. Because alerts are free, and if we get this break of this area, we might get a nice pop. You know, we might get a nice pop right up into this area of resistance. You guys have see I've used to trade CVS as well, so we'll keep an eye on it. I like it. I like it. Loke Doc said Sin stock. Yeah, we got that. Okay, so VSEC. Let's see. Yeah, so I do have VSEC on my watch list. It does look like it's tightening up. Every time it gets up here in its all-time highs, it sells off. So I'd like to see another new higher low get formed somewhere up here. Give it a lot more time to get up in that 122. It is a leader. I'm going to throw this on the leader watch list as well. I think I took this off. What reason I took this off, I'm not exactly sure. I think it was just because it's getting large and choppy here. But we cannot deny its strength. We cannot deny its strength. Cup and handle, RS rating of 89%. It's trading sideways in a down market. So we'll definitely keep that on the leaders list. Thank you, B. Stewie, for that. AXSM. Let's take a little look, see at what Yosef has for AXSM. You can see this is setting up. It's starting to get tight. What I don't like is we're not getting the new higher lows. You know, you got this, and then this, and then it breaks. It's broke down. So, you know, I much rather see if this thing was going to take off, it needs to make a new higher low before it takes off. That's just me. That's just the way I'm looking at things. It is strong compared to the overall market with an RS rating of 96%. So it's a good sign. I don't really care for the look of the stock. I much rather see it getting tighter up as it goes up higher. But right now it's making new lower lows. So we'll see. We'll see what happens with that. It's Mitch, not Michelle. Mitch, my bad, dude. Sorry, Mitchell. I do apologize for that. Sometimes I'm just looking as quick as I could, but yeah, I'm pretty sure you're Mitch. You're actually Torque, right? Let me see. Yeah, torqued up. Yeah, I like that picture too. He's one of my favorite comedians. But yeah, I like your picture. But yeah, Torque. My bad, Mitch. Yeah. But that's my leaderboard, and that's what you guys got for me. And I do appreciate each and every one of you being here and sticking with me until the very end. I promise you, if you guys have watched me from the start, I have changed my style multiple times. We went from small caps in the very beginning to mid caps to large caps to only following leaders to having such strict criterion now that I trade very rarely. But when I do, I make money. I hold on to that money. We use our multiples. We use risk management in mind. We catch those momentum leaders playing trend and base breakouts. And if that's something you can get behind, then hit that like, hit that subscribe button, guys. Thank you guys so much for being here. And if you want to hang out to the very end, I'm going to see you out. I'll give you a shout out. If you were in the chat at all, at any time, I will give you that shout out. Thank you guys so much for being here with me. Click that link tree. Click everything in that link tree. Support me, baby, because I support you. Hope you guys have an awesome start to your week on Monday. Peace! We talked about the interest rates. We talked about earnings. We talked about the economic calendar. Of course, we talked about the SPY, the sector. We talked about the Trump inauguration back in 2016. We talked about the Mag 7 stocks. We looked over the beefiest of stew charts. And then, of course, I hit you with my watch list. Thank you guys so much for being here. And anybody that commented, thank you. I appreciate you, B. Stewie. You are awesome and amazing. And you know, I love you, man. No homo. Yosef, thank you so much for being here. Torqued up in the building. Thank you so much for being a part of this. I hope you kill this week as well. Jimmy Bright, as always, thank you so much for all of your support, brother. You guys are absolutely amazing, amazing, amazing. Loke Doc, thank you so much for stopping in once again. You're becoming a regular. That one guy, you know I love you. Thank you so much for stopping in and saying hello. Yosef, just another shout out for Yosef. Why not? Erica K in the building. Thank you so much, Erica, for being here. Carl Burr, appreciate you being here. Zamora, full house. That's right. Let's go. Norman Conklin stopping by. Thank you so much. Dan Bob, if I haven't said Dan Bob yet, Dan Bob, you know I love you, homie. But Norman, holy cow, you were on time today? And I got to shout you out more than once? Thank you so much, Norman, for being a member. It means a great deal to me that you trust me enough to be a member and continue learning from me. JP, thank you so much for being here. And I think that's everybody. We're going to end the poll. 50% say you're here for the watch list. That is the one and only the watch list. Good luck, everyone. Good luck to you, Norman. Thank you guys so much. I hope you guys have an awesome start to your weekend. Night Squad.